We are joined by DhirajNim, who's the economist and Forex strategist, and also Vivek Kumar, who's an economist at Quant Eco Research. Thank you so much, Vivek and Dhiraj, for joining in. Dhiraj, what does this really mean for India? A historic move there.
Look, I think very frankly, this comes at a very opportune time, especially for the financial markets and the rupee. But let me start with our assessment for the economy first. We had pegged India's FY27 GDP growth at 6.5% below market consensus and below official estimates. And a part of the reason was that we had expected that the US tariffs will stay elevated for most part of this year. So, of course, this is a greatly welcome development from that perspective. And we believe that along with the strong momentum in domestic demand that we have seen in the recent months build up, this actually reduces risks to export performance over FY27, and growth could actually be around 6.8 to 7%, as also the Ministry of Finance projected in the latest budget. So I think it obviously brings India's growth prospects close to potential growth. And at the same time, as we have seen the price action today, it allays some of the concerns about the rupee's further weakness, the pressures that had built up in the system over the last few months, as well as, of course, the equity performance that has shown with a bit of a rebound today that what a good sentiment can do.
This is clearly, as you said, Dhiraj, with all the aspects put forth, where all it has really impacted, it's clearly coming in as the biggest booster shot that India had got, with so many implications across the board when it comes to India's macro, micro, market and everything. Vivek Kumar, rupee, one of the biggest highlights of the day, the strongest performance in 12 years, and also over 1% rise for rupee on a single day is no joke.
Well, absolutely. We've got to appreciate the fact here that rupee was fairly insulated from the macroeconomic side. So you had a growth inflation balance for the economy, which probably not many nations in the world could boast of. And at the same time, our current account gap was fairly curtailed. Despite that, rupee saw the depreciation that it saw in the last 3 quarters. And to a large extent, you could say that there was a tariff-related anxiety which was playing upon capital flows. There was a broader geoeconomic and geopolitical uncertainty which was also impacting your direct investment flows. Now, the tariff-related uncertainty is at least going to address the portfolio flows, so that part of the anxiety probably will cease to exist. You have better clarity, better visibility on in which direction is the relationship with the US is going to progress. So that's a huge positive for rupee. The direct investment flow is something which probably will take its own time to recover, because the drivers in that case were completely different. So near term, it's a big positive for rupee, and we have seen that kind of reaction in the market, more than a one big figure move in the currency in one single day. Going forward also, you could expect at least the worst case scenario for rupee that some of the analysts were building in, that will probably now get reassessed.
That's right. In fact, the kind of depreciation that rupee was seeing, it was a cause of concern, and that downside slide has been really substantially clipped at this particular moment. Now, hold your thoughts there, because a lot of really applause as well as impact, especially from the corporates who are going to earn much more, whose earnings were really depressed because of US being the largest market, being shut for us, being too expensive on the tariffs. So the corporate India is really cheering it. So the Dhurandhar deal is sealed, and Dalal Street has been cheering it as well. What is the sectoral impact for the bunch of sectors? Let's listen in to the word coming in from Bharat Forge, Pearl Global, Aarti Industries and Kitex Garments.
If you look at our own business, for the last 25 years, we've been a very significant player in the American supply chain. And like us, there are other companies that have a very strong connection with the US automotive industry and engineering industry and other industries as well. And somehow that came under a cloud for a little while, But India and America are extremely aligned, and I think this shows the strength of that alliance partnership and puts us back in the right context in a stronger position to grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
Who are importing from India were subject to pay this additional 25% of penalty tariff. And compared to our competition, who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will gives almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries. So these are the major apparel exports, or I'm representing apparel exports. I'm talking more from apparel only. So this is what the advantage that immediately kicks in.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time. Another 5 years, I think you cannot, predict, what is the demand.
This was something that the industry long awaited, and it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
All right, so very, very positive commentary coming in from corporate India. Dhiraj, how do you see this in terms of the earning momentum, big market opening up, and also the pent-up demand for the many last months of about 10 months that India has exported lesser to US, that will also kick in. What is the kind of earnings momentum and the economic impact that you foresee for now?
Well, I really can't speak to the earnings momentum. Let that be an equity strategist's job. But from a macroeconomic perspective, I can certainly say that this deal has come well in time. Look, the front-loading effects on India's exports to the US were just beginning to fade quite notably. And, it would have been only a matter of time where the financial burden on the Indian firms which were exporting to the US became large enough for them to reconsider exporting to the US altogether. So I believe that the deal happening is quite at an opportune time where those worst fears have certainly been allayed. I am also keen to note that, a lot of optimism has been concentrated in the sectors which were otherwise, scheduled to get hit a lot more because of the high tariffs, because of the high 50% tariffs, including the likes of textiles, gems, jewelries, chemicals, etc. We note that these are low-tech sectors, but very, very employment-intensive domestically. And if they are able to save US demand on the back of this deal, which I'm sure they will be, I think it bodes really well for the distribution of economic growth, which India has otherwise been recording at stellar pace. So I think that not only from an headline growth perspective, this is a positive development, but also from the evenness or the distribution of growth that we will be looking at would be perhaps better than we have been fearing for the last few quarters.
That's right. And all of those earnings from the different sectors also that you mentioned, that's all going to add up to our GDP growth. So whatever we were penciling in, we are going to beat that number with this big relief coming in. Let me begin also by getting in our colleague who has been poring over this and also brings us the sectors which are going to specially be benefiting from this in terms of global competitiveness. Let me take it across to my colleague Rishabh Bhatnagar, who's joining in with all the details.
Right. While we're awaiting the fine print of the India-US trade deal, one thing that is begging for clarity is the fact that there are certain imports and exports from India that are still facing about 25 to 50% tariffs, and those are steel, aluminium, and certain auto parts as well. And why they are facing those heightened tariffs is because those tariffs were applied differently by the US government. They were applied under the Section 232, which is a National Security Act, and basis that these tariffs were applied to these sectors. So what we're seeing is that despite a trade deal having been agreed between the two countries, sectors like steel, aluminium, copper could still face tariffs as high as up to 50%. What we're seeing is that these Section 232 tariffs are usually not waived off in free trade agreements. That's at least what the policy is that the US practices. So that is something that we want clarity on. There's select auto parts that also face about a 25% tariff. So that's still more than the 18% tariff that India has managed to negotiate for itself. There's also zero tariffs as part of Section 232. There's also zero tariffs for pharma exports from India, for smartphone exports from India. It's a major one for Apple because they send a lot of smartphones that are built here in India, but they've shipped around the world and especially to the US. Those continue to remain at zero tariffs. There's certain electrical and mechanical components that those will also continue under the zero tariff regime under the Section 232. So still steel, aluminium, copper getting the shorter end of the stick, but we'll find out more as more and more details emerge.
All right, so that was a good sense on overall which sectors are impacted and what all clarity is really required. Vivek Kumar, from an economist's point of view, how big is this, and in how much timeline are we going to see real impact on the ground and on the economy and the key drivers for that?
I think that's a very practical point, Nisha, that you brought forward, which is what can be the timeline. We just completed a deal with the EU, and what we know is that the ratification of the deal is going to take anything which could be of the order of 12 to 15 months. Because of the nature of the deal, it has to be ratified by each member country in EU, and then possibly the implementation is likely to follow. So you're looking at a window of 12 to 18 months from now before the EU deal gets implemented. Now, in contrast, the US deal under Trump's administration has the possibility of getting implemented at a very short notice, because we've seen a lot of decisions in case of US have got centralized in the recent quarters. And if the president were to speed up things, he can possibly make that implementation work through within a span of 2 to 3 months. So this probably works in favor of India, because from an implementation perspective, there is the time lag that you could possibly associate is going to be extremely low in case of the US-India trade deal, vis-a-vis some of the other trade deals that India has signed. By the way, India has signed almost 4 or 5 trade deals in the last 9 months. So that covers almost 42-43% of our merchandise export basket. That itself is a commendable task within such a short span of time. So I would probably look at everything. And since US deal has the likelihood of getting implemented sooner rather than later, probably the impact is going to be felt faster. Maybe you could see that accruing in FY 26-27 financial year. Our GDP growth estimate was in the range of 6.6 to 6.8%. Maybe with this kind of implementation, if everything goes smoothly, we could be touching the upper end of our forecast very soon.
All right, upper end of the forecast, and that's going to be really good news. But soon, by that, what do you mean? How soon could that be? Because my question started with the timeline.
Well, so yes, there is a lot of positives that we've discussed, Nisha, but there are things which are still sketchy. So, for example, a lot of details need to come out from the Ministry of Commerce in India as well as the US Trade Department in the US. And for example, things like if India has committed to buy $500 billion of energy, tech, etc., what else is India conceding in the trade deal? So you'll have to look at the overall picture. And to get a complete assessment, I think we'll have to wait for that detail to come through in the next maybe couple of weeks or so.
very early times, and we spoke to a whole host of corporates, and a lot of them were of the view that in 2 to 3 quarters, they will see a significant improvement in their performance, profitability, especially because US is their biggest market and the pent-up demand will also kick in. So that's one thing that we have really seen, but of course, many things in the fine print as well. Dhiraj, as a Forex strategist, looking at the overall picture right now, where we wouldn't say that in this particular case, just because India wanted this big market opening for itself, that we really were desperate. It was a win-win situation where US was also equally under pressure to not let go of an alignment of the fastest growing economy in the world. There are so many global companies, US-based companies, who have a thriving business here and they invest. Now, looking at US sovereign debt situation, dollar debasement as one of the big aspects, and now our own rupee appreciating because of this booster coming in. Putting all this together, how do you view the Forex trade and dollar rupee dynamics going forward?
Sure, I think that's $1 million question at the moment. Look, the dollar debasement theme, it's a very complicated idea at the moment. We could see some ingredients falling in place, but again, it's a very big thing to happen overnight. So we will have to really watch the space of the US macro policy and institutions to really understand if dollar debasement could really be a theme for the global economy. Having said that, we do hold a slightly bearish view on the dollar index, broad dollar index, through the course of 2026, and that's not very different from the market view either. And when you look at the price action for the broad dollar index recently, it broke below one of the very strong trend support levels, and that is where a lot of bearishness about the dollar in terms of sentiment has come in. The theme of dollar debasement has picked up a lot more voice in the recent sessions. But again, like I said, when you're thinking of debasement, you're thinking of days and months, not years after years. I mean, that's
all right,
how
so
it has
that's
to
a
play
big
out, and then it's
debate
called debasement.
for another day, Dhiraj. We will leave it at that at the current moment. Let's just rejoice what we have really got as a booster shot. Thank you so much, Vivek, as well as Dhiraj, for joining in.